Take a look right now at Macy's, on pace for its second best day on record after receiving a buyout offer for nearly $6 billion. CNBC.com retail reporter Gabrielle Fonrouge joins me now with the details on just why Macy's is in play, so to speak, and why it's a target for possible private acquisition.
So it's a great question. Macy's business has been under pressure. As of Friday's close, before this news came out, their shares were down about 16% year to date. They're facing competition from online upstarts. You've got Amazon, you've got Shein, and then you also have all of the brands that have long sold in Macy's are now pursuing their own direct-to-consumer models. So they're competing against the brands that they have long partnered with, right? So why would a consumer go into Macy's when they can buy Coach or Calvin Klein or Nike directly with that retailer? And what the value here is, though, is what's going to be interesting.
Okay, so what is the value proposition for somebody who would want to take over a somewhat struggling laggard operation like Macy's, at least indicated by the stock price?
Absolutely. So it's important to point out here that this is two investment firms that are interested in buying, Arkhouse and Brigade Capital Management. And Arkhouse really seems to be the one that's leading this here, and they are a real estate investment firm. They don't really typically get into retailers, right? They're mainly interested in the boxes that they have, and that seems to be the case here with Macy's. So JP Morgan put out a note, and Macy's real estate is valued at about $8.5 billion, just back of napkin math. And their market cap on Friday was about $4.7 billion, so that's almost double their market cap.
And the deal is worth $6 billion.
Exactly. And so everyone has been reporting that they're buying it at a premium. They're willing to offer a premium. You know, that share price at 21 a share that they offered is about 32% higher. But when a company is a lot more than its market cap. Macy's has about, the Herald Square location alone might be worth about $3 billion. Those other flagship locations, think Union Square in San Francisco, Chicago, downtown Brooklyn, another $615 million. Overall, that footprint, I've seen some estimates of $6 billion, $8.5 billion. And of course, Arkhouse and what we've heard from people close to this deal is that they are willing to offer more after due diligence. And I think that's crucial because really it doesn't really seem to be as much of a premium as we think.
What will be the trajectory of the traditional anchor store, shopping center, mall type operation like a Macy's? You think of names like Bloomingdale's or Saks, that sort of thing. Many of those are already private. They've been taken. So is the only way for a retail operation like a department store to be in private hands, or can they still exist as public companies?
Whether or not they can still exist depends on what the consumer wants. And right now the consumer is, going to what's convenient. They're shopping on Amazon. They're shopping at places like Shein. And of course, but you have to think about the future shopper as well. Gen Z shoppers love going to stores. Millennials have really abandoned the whole store idea. They usually use stores just as a place to make returns, do curbside pickup. But Gen Z sees stores as a place for community. So that could be a place for, whether or not they'll go to a department store remains to be seen. But there is value in these boxes at malls. Malls right now, they are splitting up these boxes. They're turning them into housing. If you can believe it, people are actually living at malls. It's becoming senior housing. They're becoming these community gathering spaces. So whether or not a department store lives in that box, at least for Arkhouse, there's value there.
The changing paradigm of the shopping experience.
Absolutely.
Gabrielle Fonrouge at CNBC.com. Thank you very much.
Thanks,
We'll see you soon. All right.